Hey, Marcus Howard here from Market Replay Live Podcast. In today's episode, we're going to have a great 20 questions interview with Jason Sweeting from Jason Sweeting Trading Academy. He's been trading for just under a decade, and he focuses on the bond market. So there's a lot of information that he's going to share in terms of how he's been successful selling bonds. This episode is going to be great because it's going to give you some really good insights on how he is able to help traders to become successful, as well as he talks about his lofty goal of being able to help 200,000 or more traders become financially free. So in this episode, it will be advantageous to listen to his clear method and how he uses his clear method to help others. So without further ado, let's jump straight into the podcast episode. Hey Jay, what's going on, sir?
What's going on, Marcus? How you feeling?
Great, man. Lovely to finally meet you. Love to get you on the podcast here. I've definitely been following your stuff, and I will say I'm excited about your ads that I see on YouTube. I like the approach that you take to, instead of being this stiff guy, hi, I've been trading for 20 years. You're like being real. Like I really do appreciate that because it shows people that you don't have to be the stiff person that majored in economics or math or whatever to really be a successful trader.
Right, of course.
Yep. So you ready to dive right in?
Man, I'm looking forward to it. Let's do it.
Lovely. Okay, so here's the first question, and it's going to be related to your background. Okay, so when did you start trading?
I started trading in 2014. It was I was exposed. I went to Atlanta to go visit a frat brother of mine. We were going to go play golf, so I went to go pick him up. And when I was picking him up, he had on headphones and he was looking at his screen. And I just saw candles. At that time, I didn't know. I call them squiggly lines. I said, what are those squiggly lines going up and down? And he said, oh, I'm trading. And that was the beginning. That was kind of like when it all started. I just started reading and jumped right in.
Gotcha. And when you were starting, what was the first market that you were trading? And then do you still trade that market today?
The first market I ever traded was the 30-year Treasury bonds. And I love it. And I trade it to this day. Literally, the chart is open right there.
That's great. Having the continuity is excellent. Okay, so then my next question for you is, what would you say was the thing that frustrated you the most when you were learning to trade?
Being alone. When you're first learning to trade, it's like learning how to walk, learning how to speak another language, learning how to understand another language. And the most frustrating thing is that the language that you're learning, no one around you is learning. And no one is patient with you and no one can speak with you. So you're alone. And to feel lonely was frustrating on my journey.
Yeah, no, that's very true. Talking to people who are just learning how to trade and then trying to explain it to their friends, it sounds like a foreign language to them. They don't really understand even what you're doing, or even can truly take it seriously because they're like, it's just charts. It's just little candle things like it, how much concentration do you really have to do? But just the level of concentration that you have to have when you're focusing on any individual trade. If you're going to be successful at anything, the level of focus you have to have is intense. But people just don't really seem to have that translate to trading, which I don't think really makes sense. Okay, so then in that similar vein, then what would you say was your process of helping you to finally become consistently profitable as a trader?
It was failing. I just failed and failed and failed and failed and failed. I found this quote long ago in my life that the first step to success is failure. So if you fail, you just keep on doing it. And one of those times you have success. Now, that's kind of like, I liken that to the first time you bowl a strike, or the first time you actually hit a golf ball and it works, or your first time you shoot a shot and it goes in. That's success. The consistent success comes along with being very particular about how you created that successful event and really meticulously ensuring that you can create those same conditions over and over and over. So as a trader, that looks like what setup did I use? What frame of mind was I in? Where was I psychologically? Where was I emotionally? What time of day was it? What was happening in the market fundamentally? What happened technically? So that way I know that I can recreate a circumstance and then have a probable outcome.
Yeah, and that's going to be important too, talking about recreating circumstances. And we'll jump into that when we go into the kind of trading psychology questions, but I
Right.
got another one for you. So, big question that a lot of traders are interested in is, Jay, how do you as a trader define your edge?
Me, that's so crazy that you say it that way. How do I define my edge? I think my edge is my ability to walk away from the table.
Mm,
I don't have to trade. I can. So the market doesn't force me. My ability to say I don't like it and walk away is the power. It's almost like buyers and sellers are always moving in the market. So it's always a negotiation. That's really what the conversation is all about. So if you're at a negotiating table and the person across from you are giving you terms that aren't amicable to your situation and you can get up and walk away, most people would give up and walk away. You go to a car dealership, you want to buy a car. The car's supposed to be about $25,000 to $27,000. The guy says, I'll sell you the car for $40,000, no less. You say, come on, man, we know this car is 25, 27,000. He says,
hmm
look, no less than 40. You say, I'm cool. I'll walk away. And that's what traders have to do. The edge in the market is your ability to say, I don't like it, and walk away.
mm. Yeah, that's an interesting way to look at it. I mean, traders look at how they define their edge in so many different ways. The way you
Mm-hmm.
seem to approach your trading decisions is through negotiation, which is something that I
Mm-hmm.
really haven't heard before. But the way that you explain it makes a lot of sense. If the
Yeah.
conditions don't seem right, it's perfectly okay to walk away because there's always going to be another deal. There's always going to be something else in the pipeline, which we
Of
know to be true.
course. One of my biggest things is that everybody is a trader. We've all traded before. Right now, the people watching this podcast, you're trading your time for Marcus and the rest of his team. You're trading your time for their expertise. That's a
hmm
trade. If you go to your grocery store, there's a price underneath a product. That's a trade. You get the product, they get the money. We're always trading. The idea is to place the skill that you have as a trader, place it into the charts. And if you see something that makes sense in the conversation, I like to call it the conversation. Buyers and sellers are always talking. The sellers are always asking for a higher price than the buyers are willing to pay, and thus moves the candles, right? So if you're talking about the conversation, if the buyers don't look right, then don't talk to them. If the sellers
hmm
don't look right, you don't have to talk to them. One thing about it is this is a skill that you can control your inputs. No one forces you in. You have to show up to work at 9. You have to leave at 5, but you don't have to press buy or sell. You don't have to get in at the market. Sometimes you can get in at the ask or the bid. Everything is you. And if the conditions are not where you want them to be, and if you're not comfortable, walk away from the table. Wait for the next deal.
Absolutely. I love it. Okay, so let's switch gears here and talk a little bit about your trading methodology and your trading
Okay.
method. So you
Okay.
explained that in the beginning that your favorite instrument to trade are the bonds, right? So why is that? What makes you choose to trade bonds over any other instrument that's available?
I always ask myself, like, why shouldn't I trade something else? Because other traders are like, Jay, have you checked out this? Have you checked out that? And I'm
hmm
like, man, would I rather trade a fast moving, highly volatile, super sensitive market that pays a little bit, or very slow moving, methodical, easily predicted market that pays a lot? I'm gonna go for the second one. So the bonds, they pay 31.25 a tick. I've never seen an instrument pay more per tick.
Yeah.
Now they move in a very methodical and predictable fashion. I can't really say that about all of the other instruments. They
hmm
are not super sensitive to fundamental occurrences. I can't really say that about other instruments. So when I look at the game, it's like, okay, who would I rather play? I rather play the market that's slow moving and high paying. Let's go for it.
Absolutely. I mean, over $30 a tick is amazing. S&P is what, 1250. I mean, and that's probably the
12.50.
highest ones that I've seen. So,
Yeah.
um, yeah, it seems like you're definitely onto something there for sure. Okay, so then in hearing you talk about that in terms of the different circumstances that come up, I was not so pivotal to fundamentals and things like that. Would
Mhm.
you say that when you're trading, that you have what we consider to be an ideal market environment? And if you do believe that there is a such thing as an ideal market environment for you, how do you define it?
Um, I
Or
think
how do you
markets,
identify it, I should say?
I look at the market as like this one machine, and it's like the weather, it's never ideal. because for somebody it's hot, for somebody else it's cold, for
Mm-hmm.
somebody else it's too humid, for somebody else it's too dry.
Mm-hmm.
So what I like to tell students is first you learn how to trade, then you learn how you trade. Those are two separate concepts because I can teach you how to trade, but I cannot teach you how you trade. You have to
Mm-hmm.
go do that. That's work you have to do. I would say what I define as ideal market conditions are when the candles are moving. Because if the candles are moving, sooner or
Mm-hmm.
later they're gonna deal my game. And if they deal my game, I know how to play. That's it. The question is for any trader, are you in an ideal space to participate? Because the market is going to do what it does every time. We wake up in the morning, the candles are going to be moving, the game is going to be on. The question is, can I recreate what I had when I was successful? Most people look at the charts for that.
Mm-hmm.
It's not just that. You have to look at yourself. Do I feel like it today? Do I want to? Am I tired? Did I have a long night last night? Am I groggy? Where am I? Did I just lose a relative? Did I just have a bad day? Am I in the right headspace? Am I in the right heart space? If I'm in the right place, then it doesn't matter the market conditions because I'm right where I need to be in the zone. If you cannot access your own self, then who cares what's going on in the market? I think the ideal situation is to look at yourself.
Absolutely. There's a lot of wisdom in what you're saying. Understanding your own internals just as much or more than the market internals is important for
Exactly.
your consistency and profitability as a trader.
Exactly.
Very
Exactly.
true. And I definitely want to jump into that some more, especially with the wisdom that you just developed. But another question that I have for you is in terms of risk, how do you determine your particular risk amount or your particular
Mhm.
lot size when you're entering a trade?
Just I look at the reward.
Mm-hmm.
If I know, like, say, here's a simple trade, everybody that's watching, I always say, Neo wrote it, Beyonce sang it, Jay traded it. And it's a hit record. It's called To the Left, To the Left. You know what I'm saying? Everybody got to look to the left, to the left. And you all know that we make our money on the right side of the chart, the candles that have not yet been born or printed. But we use the left, we use history in order to predict where things are occurring in the market.
Mm-hmm.
That's technical analysis. So I just try my best to look left, make a priority based decision. Now, if I see that what happened to the left is not ideal in my current position, if I see that the risk to reward ratio is off, then it's not my job to be in the market at that time. What I want to see typically is a 1 to 3, 1 to 4 risk to reward ratio, which simply means I'm risking $1 to make 3 or risking $1 to make 4 before I enter a market or make a trading decision. If it's 1 to 1 risk reward ratio, I'm not really interested. If it's 1 to 2, it's cool, but it's not worth it.
Mm-hmm.
When you start talking 1 to 3, 1 to 4, I can put $1 down and pick 4 up. Now you're talking my language because in a 1 to 4 risk to reward ratio, if I only have a trade that has a 25% probability, I can still be profitable. If I risk $1 to make 4, I can lose that trade 3 times,
Mm-hmm.
win it the 4th time, and still be solvent as a trader. Because when I lose 3 times and I lose one. So 3 times 1 is 3. When I win 4 times. I mean, I win 1 time, but I win 4. So 1 times 4 is 4. So I win 4, lose 3. So I'm still up 1. And that's on a 25% trade. So I look at my risk to reward ratio as the way to grow my account in a smart way.
Mm-hmm.
That's it. And I'm not jumping in unless I'm seeing 1 to 3, 1 to 4.
Sure. That's great advice. And for the new traders that are listening to the podcast, I just want to add on to something Jay said. When you get to that point where you're doing 1 to 3, 1 to 4, you lose 3 or you lose 4 and you come back to break even, please remember that you still may be a little less because you're paying commission on your trade. So just
Yeah,
because we say break even doesn't mean you haven't lost a little bit of money. Just want to put that part out there.
for
For
sure.
folks that do, I know we're going to get upset about that. I've lost some money still.
Well, you got to
Okay.
pay the house, man. The house always wins. The
Absolutely.
best thing to be in any
Absolutely.
transition is a broker. I'm telling you, that's if the
You
real
are.
estate, if you're the buyer broker, the seller broker, that's the name of the game. We all got to pay the house to play,
You're
but what I'm
absolutely
talking
right.
about, of course, are your on chart wins and losses. That's what I'm talking
Mm-hmm. Absolutely. Okay, so then in going into your 1 to 3, 1 to 4 ratio. So my question for you is, when you are entering into a trade, do you
Yeah.
already have your defined entry
Yes.
and exit point, or do
Yes.
you also leave some room in there to be able to trail if you see that conditions are changing?
I have my entry, I have my target, and I have my stop loss on every trade
Mm.
because a healthy position has all of those things. That's if I'm right, if I'm wrong, and where I start.
Yep.
If I'm right, target. Where I start, entry. If I'm wrong, stop loss.
Mm-hmm.
Because we can be right. Hey, and we're traders, we can be wrong. We're probability people. But that doesn't mean, I like to say we're probability people. We're not certainty people.
Yeah.
We're sure tomorrow the sun will rise. We're not sure tomorrow the S&P will. So we have to play the probabilities.
Yeah.
If you have a 70% trading scenario, a setup that works
Mm-hmm.
70% of the time, what you're basically saying is that you're going to lose 30% of the time. And
Mm-hmm.
that comes along with the game. So I kind of keep that in mind when I'm trying to set up my scenarios. If I set up the scenarios, I already know, okay, cool. Here's a trade setup. This is probability. This is how it's going to work. And I have a healthy target, a healthy stop loss, and a good entry. And what I found is that a good entry protects your stop. If you're
Mm.
patient enough to wait for your right price, then you won't have to really worry about your stop being hunted, being hit. You don't have to worry about that sort of thing. One thing I am a major, major proponent of is using your stop in a smart way. There's no need to continue to risk money after your trade is starting to work into your favor. Come on and cover that entry. Come on and cover that entry. That's one part of the clear method. The C in the clear method is covering your entry. So as we move and get to our target, let's make sure that even if the trade comes back on us, we either don't lose any money on the trade or we take a small profit on our belief.
Absolutely. Now, you mentioned something here called the clear method, and you talked about the C. Could you explain what the other letters are for?
Okay. The clear method is a method that I devised for my students so that they understood how to manage a trade once they enter the trade. Because
Mm.
for me, everybody says when to get in. And when to get in is good. But the question is not when do I get in? The question is when do I get out?
Mm.
Because
Mm-hmm.
we can all get in. It's just, hey, Jay, how many times have you gotten this call? Hey, Marcus, I got into this trade and now it's red and I don't know when I should get out.
Yeah,
Or I'm
happens
up
a lot.
400%. I'm up 400%. When do I get out?
Mm-hmm.
Okay, let's make a plan. Let's know our target. Let's know our stops. If the trade goes here, I'm wrong. If the trade goes here, I'm right. As I'm in the trade, what I like to do is I like to use this method called the clear method. Clear method, it's an acronym. C stands for cover your entry. When the trade moves in your favor, take your risk off the table. That way, it's a riskless trade. The L, lock in on your target. That means I need to have a predefined place where if the price gets here, I am done. The trade has done what I wanted it to do. So lock in on that. Know where it is, right? The next thing you want
Mm-hmm.
to do is expect the unexpected because we're trading the market right now. This is not the sun rotating around the earth and it's been doing it for billions of years. And we know after spring comes summer and after summer comes, no, we don't know. So expect the unexpected. Hey, I'm in this position long and I'm expecting these candles to continue printing green. And all of a sudden, here's something that expect that. What should you be looking for? Be an active trader. Another thing is as you go, take profit. The A in the clear is as you go, take profit. It's no need to let all of your contracts get to your ultimate target. I like to teach my students a method called over the river, through the woods, and grandma's house. Okay, we
Okay.
know that the trade starts at zero, say 172.00, and we know grandma's house might be 173.15. Okay,
Mm-hmm.
great. Well, how do we have to get there? We have to get over the river and through the woods before we can get to grandma's house. Well, if you're a buyer, where are the sellers? They're over the river, so you can expect it. They are through the woods. And those people, if I'm a buyer, maybe my team won't beat the sellers this time. And maybe all of my profit, even though I want the trade to get to the ultimate target, hey, as you go, take a little profit off. So I've heard traders say, hey, 50% of their way, they take off 50% of their size. I've heard traders say 30% of the way into the trade, they take off 30% of their size. So whatever works for you, if you see that, hey, I'm going to run into 4 groups of sellers as I get to my ultimate target, hey, you might want to say at every group of sellers that I run into as a buyer, I'm going to take off 1 contract for profit. Whatever your methodology is, as you go, take profit. Because what I hate is, Jay, my trade was up $800 and then I got stopped out for no money. Man, you had $800 at your disposal. Hey, take a little off. It's okay. Take $200, $300, $400 off for your trouble. Take some. The last thing, the R in the method, is read the candles. Candles are always talking to you. Candles are always saying what their intent is. Candles are always saying what should happen next. The buyers and the sellers. This is very good. Everybody, listen to what I'm telling you. The candles are talking. The buyers and the sellers are always having a conversation. It's been going on since the market started, and it'll never, ever stop. That conversation is being shown to you in a pictorial form called candles. Those candles give you 4 pieces of information: open, high, low, and close, right? Open, high, low, and close. That is going to tell you, those 4 pieces of information on any chart, no matter the time frame, will tell you what you should expect the next candle to be. When you are reading a chart and it's time for up and you don't see up, something's wrong. Continue to read. And if it is time for you to abandon the idea that you had, get out of there. Listen to me. Get out of there. If you want your losses to be small and your wins to be big, you make a decision. The problem most traders have is that as they're reading the candles, they're putting in their hope. We don't hope, we don't wish, we trade. All right. So what you have to do is read the candles. And when they say get out, get out. You can be very right at 7:58 in the morning and very wrong by 8 o'clock. You can be right at 8:09 and extremely wrong at 8:10. You know what? Being wrong is okay. Perfectly fine. That's all right. Knowing you're wrong and staying wrong, you're going to lose a lot of money. Be okay with saying, you know what? I'm wrong. Close the trade. I'm wrong. And it's okay to be wrong. Look, I like to say you can be the last person to know that you're right as a trader, but you cannot be the last person to know that you're wrong as a trader. So if you find out that you're wrong, get out of there. Use a clear method. Cover your entry, lock in on your target, expect the unexpected. As you go, take profit and read the candles. When you're in a trade, it is not time to go get Denny's. When you're in a trade, it is time for you to watch and ensure that what you believe will unfold.
That's a great acronym. That's a great methodology to use to kind of look at it. And for those that are listening in on the podcast, we'll make sure to lay out that clear methodology in the show notes so that you'll be able to have it and be able to take a look at it. Thank you for that, Jay.
Oh, no problem at all, Marcus.
So I'm sure that, I have an idea of what I believe your answer is going to be to this, but I think it's helpful for new traders to understand the thought process behind this. So as a trader, do you have what you would consider to be kind of daily profit goals or monthly profit goals or yearly profit goals?
Yeah, I try and just make 2 good decisions a day. 2 good decisions. Those decisions might be, hey, Jay, you're done for the day. That's, if you know you should be done, that's a good decision. Get out of there. A good decision might be buy here or sell there. That's a good decision. A good decision might be, you know what? Let this one run. Let's cover our entry. And we're not going to be anxious on this one, Jay. Don't, hey, this one, we cover the entry, we walk away, we let the laptop do what it does. It's the walk away trade of the day. If we come back, we make $3,000 or we make 700, one of the two. Either way, it's fine because you're done. But what I like to do is not necessarily look at my day from a profit standpoint. I look at it from a good decision standpoint. I allow myself 3 decisions and 2 of them need to be good.
Got it. That's good. So, and that leads me great into the next portion, which we want to start talking about trading psychology. Okay. Right. So it's great when, if we're looking at YouTube videos and so many traders will explain to us what's happening when things are going well. but it's
Yes.
also important for anyone to understand what you need to do in order to be resilient when things aren't working out in your favor.
Yes.
So
Yes.
you've mentioned that, having two good decisions based on three decisions. So my question for you would be kind of what are the things that you do to mitigate or handle when you're specifically having, let's say, a losing streak?
Right, right. So usually your losing streak it doesn't come from the charts. Let me tell you, it
Mm,
could be something as stupid as a thought that can't leave your brain. Like
mm,
it can be anything, man. I mean, because trading to me is both creative and calculative at the same
mm.
time. It is both a spiritual undertaking and it is also a physical undertaking. Like I'm not sure if any other traders or you yourself have experienced this, but you can literally be in the trade room and be sweating and be sitting like totally sitting down, but your
Mm,
nervous system, everything is on edge because it involves all of you.
yes, yes.
All of you. Jeez, all of you. Man, and it's so very important that while all of you is involved, you realize and take very good inventory of yourself. Self awareness is key, very key. Now, what are some easy tricks, tips that I get to do to change my method or to change my like my state, like state
Hmm.
changes? I'm not sure if you ever heard or watched this movie, The Gladiator, but every time like Russell Crowe is the actor in the movie, and when he had to fight, the first thing he does was grab the ground and he would, like rub the ground
Rub the
between his
dirt.
hands.
Hmm.
That was a state change. For Michael Jordan, it was chewing gum. For LeBron James, it's the scores table,
Hmm.
and the powder and throwing it up. It
Hmm.
is something you do to change your state. Like, hey, I don't know what was going on in my life, but now I'm Jay the Trader. You know what I'm saying?
Hmm.
Or whatever, you know what I'm saying? So having something, that rhythm, I don't know if it's a 5-minute dance before you trade. I don't know
Hmm.
if it's a walk around the neighborhood, but having something that roots you to that your body, your nervous system, your mind, your heart, your soul knows it's trading time. That's good. If you find that you're in the middle, like you did your super get ready situation and you change your state, and in the middle of the day, you're kind of still having these crazy thoughts, there's something that I do with students called power posing. Power posing is standing like a superhero for an extended amount of time. Like literally go to the mirror and stand like a superhero. Like it's the stupidest thing in the world. I promise it's dumb, but it works. Your brain begins to give you the chemicals that make you feel like you can do the most amazing things. Another quick way to change your state is by allowing yourself to eat something. Um, if you trade with a heavy stomach, you might be tired, lethargic, willing to let things go longer because you're late to things, decisions, nothing's urgent. However, what I found is just a little sugar. It might be a spoon of honey. It might be um, a scoop of ice cream. What it'll do is it'll give you some endorphins. It'll release some serotonins. It'll let your body know that it should be happy. You know what I'm saying? Because here's a little sugar, and you'll kind of get up from it.
Got it. Got it. Good stuff there. So, uh, there are a lot of things that you can do to get yourself into the state. There's a lot of things that you can do to pull yourself out when you're on a particular losing streak.
Mm-hmm.
Um, Losing streak aside, I guess this next question goes to like a specific type of state that you're in.
Mm-hmm.
So,
Mm-hmm.
what do you do, or what do you help others to do to prevent them from over trading or revenge trading?
I don't believe in the term over trading.
Okay.
I do believe in the term revenge trading.
Mm-hmm.
When you take a loss in my room, you take a loss, it costs you 20 push-ups. That's
See.
it.
Okay.
Cost you 20 push-ups. You take a loss, get on that floor. You got 20 push-ups. Why do I say, hey, 20 push-ups? Because oftentimes when we lose, we're mad and we need to release the energy of the anger. I'm mad. So most people can do about 12 push-ups in the world. Like I think the average person in the world can do like 12, 13 push-ups. So if I tell you to get to 20, chances are all of the anger in the way of frustration is out of you. You're probably breathing a little harder and you don't really want trouble. It's like the guy who wants to fight, but then 10 seconds into the fight, he's winded. So now he's just an angry, tired guy. I get it. You know what I'm saying? Nothing
You
you can
sound
do
like
about
Nate Robinson. Nate Robinson when he fought Jake Paul. That's about it. He had about a good 35 seconds in him, and then he got knocked out.
Hey, you know what I'm saying? Shout out to Nate. That's the crazy thing that he did. Is love to him, is love to Jake. But the truth is the truth. When you're tired and you're frustrated, you're just a frustrated, tired guy. Mm-hmm. So what it helps you do is automatically you don't feel like you have to do something in order to get revenge, because what you did just got that energy out of you. As it pertains to over trading, I like to ask this question. If I take 10 trades a day, 9 losers for $100 a piece and 1 winner for $2,000, did I overtrade? No. I think overtrading is overrated. The idea is to set a rubric for yourself. And what does that mean? I know people who take 50 trades a day. I know people who take 2. I know people who take 1. I know a guy who literally only trades the 16s and the double O's on the bonds. That's it. He doesn't trade any other number that comes out. No other prices gets his attention. He trades the double O's or the 16s. The vibe is, once you know how to trade, you have to get into that chart and you have to spend time with yourself to know what all of that means to you. Because over trading to me is not necessarily over trading to you, Marcus, or to any of these wonderful traders or aspiring traders that are watching and listening to this podcast. I think that's something you have to define. But that revenge trading, that is a quick and easy way to lose a lot of money. Do not do it under any circumstances. Go do some push-ups.
Great wisdom here, Jay. Jay, thank you so much for this interview. It's been a great podcast episode so far. We're on the home stretch. Got a few more questions for you, okay? So my next question for you would be, what do you feel is the best trade you've ever made?
Okay. The best trade, I can remember it like it was yesterday. So I think I was buying the 162.30s on the bonds, and I got filled. I got filled. Like, how you get filled on your price. So I'm filled, but the market never even goes to the 29s. I mean, it was the sweetest fill ever. So I got filled at 30. I'm in as a buyer. It never comes to 29. No 28s, no nothing. My stop is never even sweating. The trade goes 162.30, 172.30. I mean, 162.30, 163.30 for 32 ticks. I catch a full point on the bonds 2 contract. That's 2 racks to the face. You know what I'm saying? And I can remember seeing this trade going, yo, is it really about to do this? Is it about to? If I just want this, I want this. Come on, feel me. And I was ready to like massage the position. Like if it came in deeper on me, I would have added 2 more because I knew we were just so oversold. But it was like, the feeling I guess it gives you is like if you ever hit a baseball, but it doesn't feel like a baseball, it feels like you hit like a little pebble. You know what I'm saying? Or that feeling like if you hit a golf ball, but it feels like tink. Like that was the feeling. And I mean, clear 32 ticks out of the market, went right to the target. I get my target, like I front run my target. So my target gets hit. Wow. You know what I'm saying? The market falls off the price just so I'm like, oh God, I love this. This is my game now. You know what I'm saying? I remember that trade like it was yesterday.
That's beautiful. Okay, so then on the flip side, what would you say is the worst trade you've ever made?
Oh gosh. So I didn't turn around. So downside day off the bonds, we are oversold. We're oversold. We're oversold so bad. So here I am. I'm like, oh, we're oversold. It's time to counter. You know what I'm saying? So I'm a counter trend. I counter trend set up, 3 ticks in profit. It rolls on me. Oh God, it rolls. I'm like, okay, well, it's all good. No worries. I'll just buy lower. So I add. Moves into profit up to my entry. I could get out for no loss. 0 is what the P&L says. I'm like, oh, this is the one though. Showtime is going to keep running. Rolls. Now we're back to the downside. I'm taking on contract. You know what I'm saying? Like it's bad. I add again. It goes up, not even close. It rolls on me again. And the whole day was red. It was so terrible.
Mm.
It was like murder. It was like nothing worked. It was like nothing, like I couldn't get out. I think at the end of the day, I end up taking 3,700 to the face, like losing
Oof.
3,700 bucks. It was it was terrible. And what gets you is not the trade. What gets you is, okay, I'm pissed. I do my push-ups. I walk away. I realize,
Mhm.
hey, it's just money. It's just 3,700 bucks. Who cares? I come back to the charts to see what did I do wrong. And when you read the candles unemotionally, the writing was on the wall, Jay. All you had to do was hit reverse.
Mm.
Jeez. And that's what gets you. That's the frustrating thing. So yeah, yeah, definitely took some bad ones. That was
Yeah.
the first one.
Yeah. Tunnel vision is a crazy thing. Having that hindsight bias once you're out of it to be like, the answer was so obvious, but just in that moment, I couldn't
You
make
know,
that. I was just so committed to what it was that I thought that I needed to do,
I
and
was
it
so
happens all the
committed.
time.
I was so committed. And that's really one of the things that I right now, I harp on it so much because you
Mhm.
can be wrong in a moment. And if it literally get out. You
Mhm.
know, a small loss, it's cool. 3,700, 4,000, $10,000 a loss. Come on, you don't have to do that. Babysit the money a little bit better. You know, treat the money with a little more respect. You know, you don't have to throw it away, even if you got it. You know, I know people $2, $3 million accounts that they trade personally, and it's like, yo, they're mad about $1,000 loss. And that's how we should be. Like, if the market is telling us something, get unemotional, get technical, and get out of there. Do what the candles are telling you to do. Don't fight the market, flow with it. Man, that's one of the biggest lessons.
Yeah, that's a big lesson to learn, and it's one that usually takes you the longest time to learn, just because it takes a significant event for you to realize that something needs to change. That like
Mm-hmm.
I've lost this money, or whatever it may be. I know for me it was blowing up a trading account. I was like, wow, I just lost the equivalent of somebody else's life savings. Like that's important to me. Even
Yes.
though I had made considerably more, just the amount that I lost, I was like, this doesn't need to happen anymore. And it was a
Right.
decision I made. It wasn't even anything that the market was doing because the market's going to do what the market's going to do. You know what I
Right.
mean?
Right.
Very important. Very important.
Very
Okay,
important. I
so
love that. I love that.
if you were to, let's say, start over tomorrow as a trader,
Wow.
right? And you were
Wow.
able to have Jay have a conversation with a new trader, what would be the one piece of advice that you would want to give that trader to make sure that he is going to be successful?
Take your time.
Hmm.
Take your time. You don't have to be in a rush. A trader that rushes is a trader that's going to lose money. A
Hmm.
person that rushes is a person that's going to lose money. Take your time. We live in a society where we can literally have most anything we want within the hour. Groceries are brought to us, fast food is brought to us. Um, we can watch, even our movies go, years ago, movies used to be 2.5, 2 hours, 45 minutes. Now, if a movie is longer than, 90 minutes, something went wrong because
Hmm.
we're running out of patience as a society. There's an article about apps and app development that's called The Race to the Bottom of the Brainstem. And it talks a lot about an adult's attention span.
Hmm.
We are in a rush. They literally call it rush hour,
Yeah.
rush hour traffic. And if you're not in rush hour traffic and you stop to get a drink, you're at happy hour. Because to be in a rush, you should be sad. And to not be, you see what I'm saying? The psychology around impatience is the writing on the wall for a trader. Guess what I would tell anybody that's starting? Take your time. The candles move every day. Every day. You don't have to be in a rush. You're going to make all the money that you want. Just be patient. Be patient with yourself. You are just learning. It's okay to make mistakes. Be patient in your trades. Let it develop. If it's red, Get out. If it's green, let it get a chance to get more green. Don't let a loser run, and don't cut off your winners too early. Be patient. Patient. Be patient. Take your time. You don't have to be a millionaire next week. You can be a millionaire when it's time. You won't have to fight to get to the money once you're ready for it. The money will fight to get to you once you're ready for it. Trust me when I tell you, you don't have to be in a rush. And you might think your winnings are small, but if you can turn $1 even into $1.01 every day, literally 1%, there are people that will throw money on you magically every day. You take your time. Be patient. Be patient.
I love it. I love it. Okay, so home stretch here. Good question. I love to ask traders and just people
Okay.
in general. Okay, Jay, let's say we're having this conversation a year from today.
Okay.
Okay, so we're back. We're having another podcast episode. It's been a year. What do you feel would have to happen in your own personal trading right now for you to be happy with the results that you've had over that last year?
200,000 students.
Mm,
200,000 students. Can I tell you why?
go
I
ahead.
know, and it's no offense to anyone that is out here or that is listening. I'm a Black man, as you can obviously hear and see. Um, there are 41 million African Americans in North America. 41 million. 1% of the addressable market, we would call that the TAM, the total addressable market in business.
Mm-hmm.
1% of the addressable market is then 410,000 people. That is 1%. 0.5% is 200,000 people. What I told myself is that I wanted to change 200,000 lives. That's it. 200,000 lives that look like mine. People who couldn't buy houses because they just wouldn't let them, not because they didn't have the money. People who fought in wars and came home to find out that their government hated them. People who were disenfranchised and still are by police, by judges, by social structure. That. So I said I wanted 200,000 folks. Now, I have students that are of every hue, every background, every nationality. I have students that span the globe at this point in every continent, every livable one, of course, in every continent, that speak multiple languages in multiple time zones. They are from different walks of life. They are white and black. They are Hispanic and Latino. They are men and women. They are gay and straight. The bomb bullies are Christian and Muslim and Jew and Protestant and Catholic. What we are more than anything is family. So don't get my statement twisted with me being anti someone else, but I just know that I'm here to serve. And I know who needs the information in my head most readily. When I visit banks and when I speak to people that do what I do, there aren't a whole lot of people that look like me in the room. And I believe that it is my responsibility, as it was Mary McLeod Bethune's when she created Bethune-Cookman College, and as it was all of those before me. If you have a torch and you have gone to somewhere that we haven't been, it is your responsibility to light the way for those of us who are yet to travel there. Now, that's my belief. And because that's my belief, I want to see 200,000 people changed. Because to me, there are 252 trading days per year. If I can teach you how to make $200 a day, you're a $50,000 a year trader. The starting salary for the average teacher in America is $35,000, and they make you have a bachelor's degree to do it. So you're doing $35,000 annually, and you have debt around your neck from your undergraduate exposure. We are in a game that is tough to play. So if I can show you a better game, I'm not just changing your life. I'm changing the lives of the children that you raise, the spouse that you married, the family that you're in. If I change John Doe's life, then what I did change was the Doe family. And I know that 200,000 students represent 200,000 more people that can take vacations, 200,000 more people that can afford the books that their students need when their kids have to go to school, 200,000 more kids that are going to have school uniforms, 200,000 more people that aren't worried whether or not their tire blows this month or not. That's what I'm talking about. I'm talking about serving people's lives. And in a year, if I'm not near that goal or close to that goal, then something happened wrong. Something went way wrong, because that's what I'm trying to do. I'm trying to grow and serve. And then I'm trying to get this community of mine to grow so that they can continue to serve, because that is the vibe. When I was a kid, I grew up and there was a song. I went to church at this old Baptist church, and we have these things called hymns. Well, most people know the hymns from the hymn book, Amazing Grace. You can read it. But there's used to be another hymn book that was called the long meter and short meter hymn book, right? Check it out, everybody. So literally, this is like a hymn book of call and responses. And it was used primarily for people who could not read a book. So what they would do is just mimic the person who was calling, and then they would respond. And the most poignant lyric of any of those long meter, short meter hymns was, "To serve this present age, my calling to fulfill." And that's kind of like Yoda language. What it means is, my job is to serve this age I'm in. That's it. That's the job. I'm alive so that I can be of service. That is it. Because when I'm gone, no one will care how many times I went into the section and popped a bottle. No one will care how many times I drove off the lot with the newest six. Nobody will care. They will care if I use my life to benefit theirs. And that's the calling, to serve this present age. That's what I want to see out of myself in a year. That's what we do.
That's beautiful. And in the spirit of serving, we just got one question left. Thank you for doing this podcast episode. The last question that I have for you, man, is what do you have going on? How can we get in contact with you? In what ways can we support you and what you're doing? So just tell us how we can get in contact with you and what you got going.
Well, the first thing that you guys can do is make sure you keep listening to this podcast, because this is family. So that's the first thing. Hit the subscribe button if you're on your podcast, so you always get the notifications when a new piece of wonderful information is being served to you, because this is education. This is what we're doing right now. The other thing that you can do, you can always holler at me. I'm easy to get to, You can find me on YouTube, Jay the Trader. You know what I'm saying? You can find me on Facebook, Jay the Trader. You can visit tradelikejay.com and you can find out about me. You can email me. Hey, you can even call me. I'll give you a phone number. Check it out. This is a phone number, and you can always reach me on this number. The number is 786-755-1711. Literally, you can call me, text me, hit me up there. The whole idea is what Marcus is doing, what this podcast is doing, what we're about is making sure that you have all the information you need to make a good decision. If you want to trade the bonds, cool. If you want to trade the options, cool. If you want to do it, but hey, we're here to teach you how not to make mistakes that we already made. You don't have to do that. You don't have to do that. I already did that. I already blew accounts. You don't have to do that. Let me show you how not to do it. So that's what I'm about. Reach out to me, text me, call me, hit me on social, visit the URL. I'm here for you. I just want to see you be successful.
Jay, I appreciate you, brother.
Thank you so much. I appreciate the opportunity. Much love.
All right.